Today we're going to talk about the rise in Bitcoin's dominance against altcoins and why I still believe Bitcoin to be a superior investment at this time. Ever since the start of this massive cryptocurrency gold rush in March of 2017, there has been cycles where altcoins have drastically outperformed Bitcoin and Bitcoin has drastically outperformed altcoins. The easiest way to keep track of this is through CoinMarketCap's Bitcoin dominance chart. As you can see, March to June was a period where altcoins crushed Bitcoin. Most notably, the flippening almost occurred. That is, where Ethereum almost took over Bitcoin in market cap. However, Bitcoin rapidly recovered some of its dominance, and there was a period in August where every single day it felt like Bitcoin would go up and altcoins would get slaughtered. The real pain for altcoins came in October, though, where Bitcoin broke through $5,000 for the first time. The Bitcoin cycle ended in the beginning of December, and since then we have seen a steep drop in Bitcoin's dominance from a peak of 65% all the way down to 32% before recovering to where we sit now at around 39%. Now, generally speaking, I've always found it to be best to position yourself on the side that's out of favor. There is research that was done by renowned economists Richard Thaler and Nobel Prize winners Fama and French that have illustrated over the long term, contrarian strategies tend to work because of a very simple principle called reversion to mean. However, you don't need to be an economist with tons of empirical evidence to understand why this happens. In my opinion, this occurs due to the fickle nature of investor psyche and the way the voice of the crowd works. In the cryptocurrency space, this is even truer than it is with stocks because prices are more volatile, the market is relatively new, and investors involved are generally younger, less experienced, less wealthy, and desperate. What I've seen happen time and time again is that when we're in an altcoin cycle, Bitcoin is claimed to be dead and an outdated technology, and while we're in a Bitcoin cycle, the Bitcoin maximalists come out in full force. I remember recommending Ethereum on this channel back in October when it was trading at around 5 million Satoshi. Recall that we were in a Bitcoin cycle at that point, so Ethereum kept going down, and there was a Bitcoin maximalist on Twitter who followed me that would send me the ETH to Bitcoin chart every single day. And I remember I recommended Ethereum again on December 5th at around 3.9 million Satoshi, and I believe it was like the next day or 2 days later where it fell to a low of around 2.4 million Satoshi before it eventually skyrocketed back up, and I believe it's sitting at around 8 million Satoshi now. So if you go back to some of my earlier videos, you'll see that I recommended altcoins frequently as we saw Bitcoin receive all of the attention due to the Bitcoin Gold and SegWit2x hard fork hype. Now, that may not have panned out in the short term, and trust me, there was a lot of people who pointed that out, but it ended up working out well once December rolled around and we saw the end of the Bitcoin cycle. Now, they say that being right at the wrong time is the equivalent of being wrong, but they often say that when referring to cycles in the stock market and the economy, which take years to play out. So being wrong can result in drastic underperformance for very long periods of time, which usually results in clients leaving your firm. Now, fortunately, in the cryptocurrency space, cycles appear to happen much more frequently and usually only over a period of a few months, meaning if you're right at the wrong time, it doesn't take long for the markets to catch up. Note that cycles between Bitcoin and altcoins have existed for years, but those cycle swings have become much more extreme recently, which means better opportunities for us as investors and swing traders. With Bitcoin SegWit adoption increasing, Coinbase and Bitfinex being the latest on board, we've seen a drastic fall in the average fees on the network. Now, it's worth noting that a principal reason for why fees have fallen is because Bitcoin transaction volume has plummeted, although on the plus side, the number of outputs per transaction has been increasing, which signals that more service providers are implementing batching. Now, one of the biggest narratives for why altcoins have been rising in dominance was due to Bitcoin's sluggish and expensive transactions. But obviously both of these factors have become substantially less problematic partially for the right reasons, aka SegWit and batching adoption, and partially for the wrong reasons, aka network load has decreased or the transaction volume has decreased. However, I don't think the majority of market participants are looking into the why, and they're really only focusing on the end result, which is that Bitcoin is finally becoming more suitable as a payment option again. Who knows whether or not companies like Valve will start accepting Bitcoin again on Steam, but it is less likely that merchants that are currently accepting Bitcoin will drop it as a payment option. At this point, it's still safer to accept Bitcoin as a form of payment than any other cryptocurrency due to familiarity, dominance, and maturity. I have stated before that realistically the only serious reason a merchant should accept any cryptocurrency is to increase sales through marketing hype, not because it offers any serious advantages over alternative payment methods. I know that probably pisses some people off, but the reality of the situation is that between the lack of clarity surrounding accepting cryptocurrencies as payment and its impact on a company's books, its impact on taxes, the legality questions surrounding it, the frustration of dealing with returns, and the insane volatility in the market, accepting most cryptocurrencies is generally going to be a hassle for the overwhelming majority of business owners. And I still think the most valid reason for accepting them at this stage, especially for mom and pop businesses, is so that cryptocurrency enthusiasts will spend a few extra bucks at your store. Now, obviously, this isn't true for all business owners, particularly the ones who are familiar with cryptocurrencies, but it's going to be true for most of them. And if you're relatively unfamiliar with cryptocurrencies, you'll probably want to default to the one cryptocurrency that everybody talks about, which is Bitcoin. Even at this stage, most people have really only heard about Bitcoin and don't know what a cryptocurrency is. They don't know what Ethereum is. They don't know what Ripple is, Litecoin, or any of the other cryptocurrencies we like to talk about and think are obvious to know about. That familiarity with Bitcoin, along with the fact that Bitcoin has been around the longest, is still going to lead to higher adoption for it over other cryptocurrencies, specifically as a payment option. But in all honesty, I don't think adoption is the key factor that is driving these cycles between altcoins and Bitcoin. When altcoins rose in dominance, it had very little to do with adoption and more to do with marketing hype. The more a coin promised, the more money that was pumped into it. Partnership announcements would cause a coin to soar, even if that partnership was relatively unimportant or preliminary in nature. The same was true for Bitcoin during its last cycle in October. We had just recently lost China, which is one of the biggest sources of Bitcoin trading volume, and people were buying into hype over a fairly obvious joke fork, Bitcoin Gold, and the community splitting fork, SegWit 2x. And to this day, I would say no one can say with any degree of certainty why Bitcoin rose to $20,000 from November to December, other than momentum and hype. These cycles seem to occur as a result of a shift in the voice of the crowd and an increased number of bag holders on the wrong side of the cycle. In my view, this is sort of how cycles shift. The first group to move over is the people who suspect that a new cycle has begun and who aim to get back into their original positions at lower prices later on. The second group to move over is the momentum traders, who are generally going to wait for a strong sign that we are definitively in a new cycle before moving their assets over. For example, this group may wait for dominance to rise over 40% and show some stability over that level before moving over. And then the third and final group is kind of more of a wave, which is the bag holders who see other people moving over and making more money than they are. Now, once this final wave completes, the cycle is over, and we start moving over in the opposite direction. Now, some of you might be pointing out there are times where there is a clear paradigm shift in market dominance, as we saw in March of 2017. What is to prevent such a situation from occurring again? Why can't the long-term dominance of Bitcoin fall to 25%, 15%, or even 10%? This is especially true when you consider a major reason for Bitcoin's dominance is the fact that it provides the most liquid trading pair against all other cryptocurrencies. However, recently some exchanges have been announcing that they would like to add direct fiat gateways to altcoins, which means you wouldn't need Bitcoin anymore to buy them. Now, my short answer to this is there's nothing stopping long-term dominance from falling to 25% or lower. It's a very plausible and possible reality. However, I suspect that we're still too early stages for decentralized applications to take off based off of what we've seen so far. If CryptoKitties is the best we can offer at this stage, then we've got a long way to go for the quote-unquote Web 3.0. Now, cryptocurrencies that are aiming to become payment options are probably going to struggle against Bitcoin for the reasons I discussed earlier regarding familiarity, dominance, and maturity. In other words, lawmakers, for example, are going to focus on Bitcoin. They're not going to be thinking about cryptocurrencies like Nano in the majority of cases, which is one of the points I brought up in that video, which I still think is relevant to today. And I think that's true of other cryptocurrencies that are trying to be payment options as well. In other words, what I'm trying to say is that while a lower long-term dominance for Bitcoin is certainly possible, I suspect that it's likely far enough away that it's not going to be relevant to any trading decisions we make now. Furthermore, if we're looking over the real long term, while it doesn't seem likely that a Bitcoin ETF is going to happen this year, it's likely to happen at some point over the next 5 years, which should result in a surge of capital and liquidity for Bitcoin. Now, note that the problems that the SEC has discussed when it comes to Bitcoin ETFs are even worse when it comes to other cryptocurrencies, meaning that it's not too likely that we see any ETFs for any cryptocurrencies aside for Bitcoin for a very long time. In summary, I still see Bitcoin as a superior investment over altcoins, even despite dominance rising to 39% recently. Given Bitcoin has traded in a range between 32 and 39%, basically the 30% range, I would probably recommend waiting until a clear break over 40% dominance for those of you that still haven't allocated to Bitcoin in preparation for a cycle shift. In other words, I would probably aim to be part of group number 2 at this stage, since the ship has sort of sailed on being part of group number 1. And the best advice I can give is try never to be part of group number 3, aka the buy high, sell low group. As usual, I hope you all enjoyed the video. Make sure that you check out my Steemit if you would like to interact with me, because I tend to be a little bit more active on there. Although recently I know I haven't been responding to comments as much because I've been super busy. I'm going to try and remedy that, but just wanted to say I know I haven't been the best on that front. Anyway, as usual, please leave a like, comment, and subscription, and I will get back to you as soon as possible. Thank you for watching.